Hello everyone, I Dr. S.R. Pagare from KJ Somaiya College of Arts, Commerce and Science welcome you all to another session of Cost and Works Accounting. In today's session, we shall study the concept of budgetary control, its classification according to functions, and in that functions we will be studying about production budget and production cost budget. So let us first understand how are budgets classified according to functions. According to functions, budgets are classified into various ways, and that we get sales budget, production budget, cost of production budget, purchase budget, personnel budget, research and development cost budget, financial or cash budget, capital budget, master budget, selling and distribution cost budget, labor cost budget, plant utilization budget, and administration cost budget. So these are the 13 types of budget that we get after the classification according to functions. Now today we shall study what is production budget. Now, what is production budget? Production budget is a forecast of the production for the budget period. Budget period may be short term, current level, or for long term. In simple words, production budget is an estimate of quantity of goods that must be produced during the budget period. As the quantity to be produced mainly depends upon sales, the production budget is based on the sales budget. Production budget is financial planning related to the units of product that the management thinks that the business should produce in the upcoming period, that is the budget period, to match the estimated sales quantity, which is based on the management's judgment related to the competition in the market, economic conditions, production capacity, consumer prevailing market conditions, and past trends. The production budget may be built up in terms of quantity or money or both. It is the duty of production department to prepare the production budget, and so production manager is responsible for preparing this budget. The production manager considers the following factors while preparing the production budget. First, the time lag between the production and the sales. Second, the stock of goods to be maintained. Third, the sales budget. Fourth, the plant capacity. Fifth, availability of raw material and capital to have desired production. Sixth, availability of skilled, semi-skilled and unskilled labor. Seventh, policy of management regarding production. Now let's see the objectives of production budget. First, to decide what and when is to be produced, where and how is to be produced. Second, to plan the sequence of operations required for economical production. Third, to serve as a basis for preparation of production cost budget. And fifth, to make provision for materials at right time, in right quantity, of right quality, and at right price. Now let's see the advantages of production budget. First, it helps in best utilization of the production resources of the business. Second, it assists in computation of forecasting, profit and loss statement. Third, it provides a means of evaluating performance of every element of cost. Fourth, it helps in ascertaining profitability of the business. And fifth, it helps to maintain inventory at lower level, which in turn helps in reduction of production cost. Sixth, production budget helps to bring uniformity in production. Seventh, production budget helps in reducing the total cost of product. 7. Production budget helps in scheduling of labor. 8. Production budget helps in setting the purchased budget. 10. It helps to utilize the labor hours efficiently. Now after preparation of production budget, we have to prepare production cost budget. Let's keep in mind, after sales budget, we prepare production budget, and after production, we need to prepare production cost budget. Now let's see what is production cost budget. Production cost budget is also known as cost of production budget. It is defined as an estimate of cost of output plant for a budget period. This budget may be classified into material cost budget, labor cost budget, and overhead budget. The production budget determines the number of units to be produced, and when these units are converted into monetary terms, it becomes cost of production budget. I repeat, the production budget determines the number of units to be produced, and when these units are converted into monetary terms, it becomes the cost of production budget. The cost of production budget is the total amount to be spent on producing the units stipulated in the production budget. The physical units are broken into elements such as material quantity, labor time, and manufacturing overheads. The material cost, labor cost, and overheads required for manufacturing are to be totaled or summed together to make it the cost of production budget. This can be the format of production cost budget, where material and labor are divided, the columns are made. In material, we can have item of material required, quantity of material required, rate per unit, and by adding all this we get total material cost. Same thing is with the labor. We can add the amount of operations, grade of labor, hours, rate, total labor. We can get the total of it. And after that, in the last columns, we can get the total for a particular department, its total cost and cost per unit. So, in today's lecture, we have learned how to prepare production budget and production cost budget. Very soon, we will be meeting with the